What's going on, everybody? Jeff here. Welcome back to the channel. Well, today played out very, very predictably. I'm going to explain to you exactly why. And I also want to talk about a point that we're getting at that I feel many are not talking about. And it has to do with a little bit of a bigger picture. I feel like, especially some of my videos as well, have been focused on lots of short term, lots of intraday. Considering my long positions have been slowly, evaporated all the way back since August of last year. My focus has been very narrowed down, and I know some of you might be struggling. There are some days I struggle too. This is a very difficult market, especially because of this low volume. Lots of fake outs happening, news changing overnight. A lot of the big moves are happening overnight, but I really want to talk about a little bit of a bigger picture. I was speaking with, my father last night. I went and saw Top Gun. It was awesome. But I was speaking to my father, who is much, much older than me, has a lot more experience that I do. And it really got me thinking. And I wanted to share this with you. It's going to be very important. And it's a little bit bigger of an outlook than just the slowly day to day. Okay. So I'm going to cover everything. So let's get right into it. First off, yesterday, yes, they hiked by 75 basis points. We had talked, previously that really had a 24-hour change of what was priced into the market. Today, pretty much played out perfectly. I said to everybody in the group yesterday, expect the algos to fire up right before 2 o'clock, a lot of chop. Then generally after 2:30, you get that Powell pump where the market will pump. I really thought we were going to get that close above that 384, 385. You get that Powell pump. The day immediately following is a heavy red day, as you can see, followed by a couple green days. I don't know if we're going to get those couple green days like the cycle has played out, just because it's a Friday ahead of a 3-day weekend. But you can clearly see this if you zoom out. And I know I've mentioned this so many times, I don't want to harp on it just too much, because there's a much bigger message that I want to talk about. But that 350 is a huge psychological level. You see 352 is a lot of support right here, and a little bit of support also, as well as this 367, 368 area. We are now looking at a much bigger time frame on the weekly, so it'll be interesting to see exactly where we close as of tomorrow. Okay, a couple big levels that we did break down. One is going to be the Dow 30,000, officially closing above that. We have about 11 minutes before the market close. I'm making this video, and NASDAQ approaching that 10,000 level. So let's get into what I wanted to talk about, and when it comes to a much bigger picture. Okay, so first of all, the second quarter is going to be closing up in just 2 weeks. The first advanced estimates of second quarterly GDP are going to be released in about 6 weeks. All right, you have gas prices that are still severely elevated. There's a big part of me that just sees that we are headed into a midterms in a very short time, and felt like there was going to be a little bit more combativeness against the gas prices. I know there's a lot of speculation and subjective on whether the government can influence gas prices. Just remember, policies have massive influence on anything that is a publicly traded commodity such as oil. However, we haven't really got that as of since. So expectations of a negative GDP, which would be the second one, which by definition would classify us being in a recession, is less than 6 weeks away. After those 6 weeks, just picture to yourself in one moment what is going to happen, not only with yourself, okay, and your family, and how you're going to be able to change your lifestyle going forward in order to be able to make it through this. But what is the media going to do? Everything is going to be portrayed recession, recession, recession. Now, getting a pop in the market very short term, let's not even talk about that. Obviously, there are some gaps to fill on the upside when it comes to the entire market, especially the massive sell-off we've gotten, over 50 points in just about a week and a half. But think about those headlines: recession, recession, recession. And I have a bigger message that I really want to talk about with everybody. Is in times of recession is when the biggest growth is made. Now, I know a lot of you following my channel, a lot of retail investors got into the market after the COVID crash. And when we take a look at the COVID crash right here, I'm sure a lot of people didn't get in right in May. Some people did, as immediately they were working from home and they said, hey, wait a minute, I can start trading right away. But a lot of people didn't get in until this move was already made. Okay. A lot of people got in early 2021, late 2022, around, when GameStop first, went in January of 2021, and that attracted a lot of interest. And don't get me wrong, we've had some massive gains. All right. However, this is the entire market. A lot of, you guys were invested in high growth, which definitely tailed off much earlier, okay, than the entire, S&P 500 and your blue chip stocks. However, there was massive gains that had happened. And I'm looking at some of these stocks and thinking to myself, and people asking, when are you going to be getting back into your long-term portfolio? And if you're looking at the SPY on a weekly chart, even if you look on a monthly chart, the weekly hasn't found quite a bottom yet. It just looks like it's continuing to free fall. We get some of these short relief bounces, but nothing's lasting. The volume is low. When it comes to the economic outlook, it's vastly changed over the past few months. And we just really haven't gotten to a point where there is a definitive plan that is going to be executed with specific expectations. Nothing. Okay. From multiple sides, from the Fed, from the government, from multiple sides. We haven't gotten that. And investors aren't buying, especially what Jerome Powell said yesterday. All right. So we're not yet there. But now, if you're not playing the intraday, if you're getting chopped up, all right, and I've been open with this. Sometimes, last month I made too many trades. I did get chopped up a little bit. Okay, my risk to reward ratio has gone down significantly, and a lot of that also is because of the low volume, of the fake outs, of the overnight. There's a lot of move happening, and it's smaller during the intraday. However, now is the time to be able to plan of what you're going to be able to do in the next run that we have. Okay, when you look back at what happened in '08, which is a different scenario with mortgage-backed securities, which, by the way, housing starts were down over 14% today. Building permits down 7%. That's a big decline, way over their consensus. I think their consensus was about down 2% or something like that, between 2 and 3%. So big differences. But when you look back at '08 and you look back at that, the recession that we had, the market tailed. It was a little over 50%. And it was about, I want to say, from October 2007 to March 2009. I'll never forget that March 2009. I had a really bad car accident March 7th, 2009. Okay, but when you look at that time frame, that's an area where you can prepare for how you're going to change and how you're going to grow over the next run that we have. The next run that we had lasted, okay, from March 2009 all the way to 2020. That's when startups were built. All big companies that could not weather the storm, they fell off. New startups, new growth happened, and that's an economic expansion. And you want to be able to ride that from the beginning and position yourselves to be able to ride it from the beginning. And I'm going to continue to cover and talk more about this because I feel like over the next, and I stated this at the beginning of this year, the end of last year, that my real concerns were 2023 and 2024. And a lot of that was because this was a midterm year. And you watch a lot of things happen, okay, especially during midterms. It's a little bit different of a time frame. However, because inflation has continued to run rampant and numerous other reasons, obviously things have changed halfway through the year. Okay, but I'm going to continue to cover this over the next, 6 to 12 months and really try to give everybody a better idea of what I'm looking at and try to take a step back from just the solid intraday. Of course, I'm going to cover it. I play intraday. All right, I'm still going to post everybody inside the group, have my full pre-market plans, but really try to focus on the bigger picture because now is the time where you spend the next 6, 12, 18 months, really put in the work, really put in the focus, position yourself to give your the best opportunity to ride that from zero all the way up to the next, whether it's 5 years, 10 years of economic expansion. All right, it used to last about 5 years. Now the average is about 10 years. You look all the way back at, the dot-com and 9/11. That was another 6 or 7 years before, obviously, the housing bubble happened. And then, of course, another 11 years before, COVID happened. But like I said, you position yourselves in that, perfect opportunity, you're going to be able to ride it going forward. So guys, that's it for this video. I'll see you in the next one.